Hello and welcome back again. We're gonna be talking about the ARKK Innovation ETF, and this is a continuation of our series in which we are talking about the stocks that are actually part of the fund, and we're taking a deeper look at what the fund consists of. So far we have talked about the four core holdings of the ETF, and that would be Tesla, Teladoc, Roku, and Zoom, is what we have talked about in previous videos. And now we're gonna be talking about the fifth largest holding of the stock, which is Coinbase. And so we're gonna be taking a look at that company. But first, the thing to notice is that the whole fund here has been dipping significantly and keeps going down. At least it had a little bit of an increase with the market coming up past couple of sessions or so. But as a whole, the company has the ETF has actually really slumped here and has actually crashed to the ground. Now we're going to be talking about Coinbase in this one, which is again a core holding of the fund. And we're going to see if it's one of the usual holdings of this fund, which is mostly about overvalued companies. Not so much innovation, I'd say, but a lot of overvalued stuff. So is that the case with Coinbase though? This is what we want to examine. Now, the first thing that you notice here is that the PE, for instance, is pretty nice over here. Is 12, is sitting at 12, which is actually pretty low here. But notice the next 12 months, 34, and that's pretty much because of the recent issues with the cryptocurrency, which has kind of become obsolete for a little while. And this is about the cyclical markets. Like cryptocurrency right now is a cyclical market. It's going up and down. I'm pretty sure at some point it will go up again. But if you own this kind of company, you have to be really considerate about these kinds of very long potentially slumps. Where actually the company won't be making money because nobody's trading cryptocurrency. Now, if you believe that the crypto at some point is going to be similar to stocks, where they're generally speaking are going to be going higher and higher, or generally speaking again it's going to be a lot of trading, then you're fine with it. But it's worth noting that the less activity there is with trading, which happens a lot with crypto. If whenever there are downturns, the less money the company is going to be making, and so that's something to bear in mind. Now that doesn't mean that you shouldn't buy the company, but it's worth adding some potential risk to your mind, so that you actually calculate for more of a return, for a higher return, because you have that risk and that cyclical nature potentially. So this is one that could actually do well in the future, depending on what cryptocurrency does. Now, if you are following my channel, you know that I think of crypto mostly as a lottery ticket for the most part, that you can buy and you can make a lot of money or lose a lot of money, pretty much. But in terms of fundamentals, there's not many things about it. It's mostly about what the next person is willing to pay. So as long as you understand that and you're fine with that, then you can buy a little bit. I actually do have some crypto, and again, I'm acting and I'm trading it as if it's just an instrument that I'm trading as a typical, let's just say, ticker symbol that I'm trading during the day. It's all about the trade. It's not about the fundamentals in this case. It's mostly about almost like a lottery ticket, or you could think about it as a ticker symbol that I'm trading as a sort of like day trader, trying to make some money, just by trading, but not really acting on fundamentals, because there are none, especially for the lesser known coins. Okay, now let's take a little bit of a closer look at what the company is doing. The outstanding shares here are sitting at 219 million. The company has been issuing a little bit. This is like 10% about from 2021. That's actually less than a year, so that's a lot for 1 year increase. They try to take advantage of the price, I suppose. So the next thing that we're going to be taking a look at, of course, is the income statement here. And as you will see, the company has been having some amazing revenue growth. Now, that's not indicative of what's going to be happening in the future, because this is the very first few years of its presence, really, as a public company. And also, it went public at a time where crypto was very hot. And as you'll see here, like 2021, there was a time back in 2021 that it was very, very hot and everybody was buying new crypto. So there was a lot of activity and a lot of money to be made. So this is why you're seeing this kind of insane growth. But now I'm pretty sure for the next year, we're going to be seeing much, much less growth of revenues. And this is a case where I'm going to be actually using the analyst projections from my tool, because that really matters here. It's a very, very cyclical industry. You cannot really predict what's going to be happening unless you have some analysts giving you some ideas, because they are actually factoring all these things that I have mentioned. And so the net income here has increased as well massively in 2021. Again, there was some steep activity increase. And what about the total assets of the company? 21 billion. That's a lot. That's a lot of money here. I'm assuming that they got a lot of it because of investors and selling stock. We're going to take a look. The total liabilities of the company sitting at 15 billion. That's also quite a lot, but still they have a lot of money. And the total equity at 6.3. Now the cash flow of the company, cash from operations here is positive, and that's obviously an awesome thing to see. And the cash from investing is in the negative because they have been investing in some things, including market securities, but they have very little capital expenditures. That's pretty neat. And cash from financing here is positive, as I would expect, as I mentioned earlier. Oh, it's actually debt for the most part, so it's long-term debt that they have here, not so much issuance of common stock, because they do issue a little bit, but they do buy back some as well. So this is almost zero here as a net, but it's mostly about the debt here. It's for $3.4 billion in debt here. Okay, the free cash flow of the company from being in the minus 2019, they made a lot in 2021. That was an insane year for them. They made a lot of money from operations, as you can see. And yeah, this was pretty much amazing for them, an amazing year. Now, of course, that really depends on whether this kind of increase will be continuing. And so I'm wondering what this change in other net operating assets is actually, because that may be important here, because this really increases the whole cash from operations activity. This is something that requires a little bit of a potential research here to see what this is about really. Okay, because this may be a one-time thing. Okay, so the free cash flow, as we mentioned, is increasing. Okay, but the multiples of the company are sitting at good levels here. 4.6, 5.0. It would be better to be around 3 or less, but it's not terrible. It's not super expensive, and the profitability of the company is awesome, of course. The return on equity is amazing, 100%, almost. That's insane, but I don't expect this to continue, of course. And the solvency here, 61.4%. They issued a lot of debt, so that's something to be expected. But again, I don't really consider the company to have much troubles, really. They did make 10 billion in free cash flow, and the total liabilities were like 15 billion, so that's insane. They can pretty much pay their whole debt in like a year and a half or so. So again, all this is justified from the insane trading year in 2021, but you shouldn't expect this kind of multiples to keep on growing. That's very important, and this kind of values may take some years to come around. So the next thing that we want to examine here is our valuation and see whether it's worthwhile buying the company and at what price. It's sitting at 177 right now, as you can see here. And if you take a look at the averages, you will see that they are insane, just because we have a couple of years here, and 2021 was an insane year for the company, and so we cannot go by this insane growth here and margins. I mean, the margins are typically normally fine and could be similar for the most part, apart from the free cash flow margin, because it has to do with revenue growth, and it can be skewed. So we're going to adjust that. And what we're going to be doing here is we're going to go, actually I will potentially examine the analysts here. And so I did take a little bit of a look for the estimates of the revenue for the company. It looks like they're sitting at about 4 billion to 7 billion to 10 billion. So it's about in between 7.8 here. I think 7 is not going to be happening. Actually, 7 could be happening because it's the same, but 10, it's probably unlikely. I don't expect this to grow that much from what it is right now. I could potentially even see the company losing some of its revenue, so actually going down and not really increasing actually, but actually decreasing its revenues. I wouldn't be surprised at all. And so I want to go a little bit conservative here. I'm not gonna go crazy conservative though, but I'm still going to add a negative potential increase in revenue growth. So basically a decrease in revenue growth because again the activity of the company has been really slowing down lately because very few people are trading crypto compared to 2021 right now, and so this can really affect the bottom line of the company. And so I'm gonna go -5, let's go 0 and 5, go in between, and the net income margins of the company are probably going to stay similar here, and I'm gonna go with something a little bit sort of like in between. So let's go with this is 21 over here. Let's go with 20, 30 and 40. And the free cash flow margins, these are insane here, and again that's because the company made insane amounts of free cash flow, and that's not something to be continuing, of course. This is not going to be sustainable because if you take a look at the net income of the company, it was sitting at 322 for instance over here and 3.62, but for instance in 2021 this was the company made almost 3 times as much free cash flow as its net income is, which points to a company that it's not really making so much money from profitability but other metrics, other things. And free cash flow can be skewed by a lot of things, and we want to be making sure that we don't overdo it with our projections. So typically you want to be near 100%. So I want to go something like 90, 95 and 100 here, and I'm gonna go annual return of 13%. And if I calculate, you will see that currently our low projections here are sitting at 104, our medium ones 191, and our high ones are 307, while our current price is at $177. Now, if I go with a little bit of a higher annual return, let's say 15, just because again the company is more circular and therefore more risk. So if I go with 15%, which is what I would go with actually. Then we're getting that the medium estimate is actually even lower now, of course, because we are requiring to make more money right now, 15% on our money, and so we are a little bit below our current price, and so we are considering this one to be off, but the high estimates are still within our target range. So what I would be doing with the company, I like potentially having a little bit of Coinbase, but I would like to have it at a much lower price. So what I would do with this company is potentially wait for a massive decrease in activity in the crypto market, and buy then if it actually goes down. So if it goes below 100, for instance, then it would be a potentially interesting buy, and I could try to capitalize on an uptrend of the crypto market, which will happen at some point. But because there is quite some risk here with these kinds of companies, and I don't know what's going to be happening with crypto in the future, I'd probably stay away at this price and just wait for again for a potential sale. And I wouldn't really keep this one more than likely for the long term. Now you could think about it differently. You may really like crypto and think that this is the industry of the future. I'm a little bit conservative here, and I don't know what's going to be happening with crypto. I think they may be relevant, but Coinbase is a broker, and so I don't know how much this craze will going to be continuing for. And so even if the crypto market does well and keeps on growing, Coinbase is actually Coinbase's business plan is about people trading, and so if people stop trading and if the craze stops, at some point it will at least be linear. Then we may be seeing the company not really enjoying this insane amount of revenue. So yeah, I'll be a little bit conservative here. But yeah, this was the 5th largest holding of the ETF, ARKK, which I think it's too much to hold for this company for for an ETF, way too much. But yeah, again, this is all about potential innovation. So yeah, now you know what's the 5th largest holding of ARKK. Let me know below if you're thinking of adding Coinbase. Again, it may be an interesting opportunity to add a little bit when the market goes down, the crypto market. And please leave a like and subscribe. I'd love to see you around. We're making tons of videos pretty much every day. And thank you for watching this one. And in the meantime, take a look at this video that I made earlier. It's about Square, or Block as it's named right now. And you'll see whether it's worthwhile potentially adding to a portfolio. So thank you for watching, and I'll see you soon. Bye-bye.